Energi is an industrial reinsurance company, in essence really a virtual insurance company. Definition of an industrial reinsurance company is a company that has a managing general agency program administration entity and has the ability to underwrite, which we do today, loss prevention, safety, claims management and oversight, and policy issuance. What's different is, unlike typical MGA operations, we have a reinsurance entity that we take risk through. It's a captive reinsurance entity. Our policyholders today do not have a direct interest in that. We issue guaranteed cost policies, so they have no liability exposure as it relates to the captive. It's a wholly owned subsidiary of Energi. We have over 700 policyholders. We just broke $100 million in premiums in the U.S. Today we offer guaranteed cost products to large deductible products. We insure companies that have anywhere from 2 employees all the way up to thousands of employees. We have policies we've issued anywhere from $5,000 an account up to $5 million an account. Well, our core business today is traditional property and casualty programs, property, general liability, workers' comp, commercial, automobile, and it's for those sectors of the energy industry: fuel distribution, energy construction, renewables, utilities, oil and gas production, agricultural cooperatives that distribute fertilizer, feed, and fuel. We're also have what we call our emerging business. That's our alternative energy solutions group. You know, Energi has developed some of the cutting-edge products that help financial institutions be able to support financing energy efficiency projects and renewable energy projects. We just announced a major project that we help support, enable them to get to financing. It's the largest fuel cell project in the U.S. It'll be in Bridgeport, Connecticut. We see substantial opportunity, though, in some of the emerging products out there of existing technology. For example, fuel cells technology was used by the military and also by NASA, and now they're commercializing that technology, so it's known technology. Energy efficiency, we see a huge opportunity there where building owners can do retrofits of the buildings to reduce energy cost, and our product that we have in the market, our ESW product, can help support the financing of those products. Fracking is still a challenge for insurers. It's a challenge to understand, concerned about the potential legal environment and the defense costs related to it. Clear to us in the R&D and research that we've done is that state governments have done a good job, especially North Dakota, Oklahoma, Pennsylvania, Ohio, have passed very strong regulations as it relates to fracking. But the whole expansion of the oil and gas market in the U.S., the natural resources that we have, and that's really going to drive the future, and it's really going to drive the future of the U.S. economy and really allow us to be potentially energy independent by 2020. We've seen a retraction in capacity lately. Unfortunately, there's been, in certain sectors, some major catastrophic losses, and so there's been retraction of capacity. A couple places we've seen it is in heavy truck exposure. We've also seen it with propane, and we've also seen it with pipeline operations in the U.S. because of some pretty significant losses. I mean, there was a pipeline rupture from a tree that hit in Ohio. That loss is estimated to be in excess of $50 million. We've probably just seen the largest propane loss in history down on Long Island. 4 people in burn units and 17 people injured, 2 deaths. Clearly, capacity is an issue. We've seen the excess capacity reducing. And then in addition to that, we've also seen some pricing increases in certain sectors and hardening. But at the same time, we've also seen some competition come in to some of the sectors and starting to affect the overall pricing.